Jay Powell's money printer is cranked up to high. The Fed committed to saving the stock market, keeping the economy out of a recession by ramping up inflation. Wait, that sounds bad, right? That means everything's going to cost more in the future. So what should I do? Stash some gold bars in my basement? I mean, I want things to be cheaper, not more expensive, right? Well, actually, you don't, because when things do start to get cheaper, humans don't actually go spend more money. They actually spend less because the longer you wait to spend, the more your money is worth, and then stuff gets even cheaper. It really incentivizes you to keep hoarding your money because that cash is going to be more valuable tomorrow than it is today. And if nobody's buying stuff, then businesses have to stop making stuff and stop paying people, and that leads to even less spending and a recession or a depression, and nobody wants that, especially this guy. That's why his money printer go BRRR, and interest rates are low, and the Fed is going to keep doing whatever it takes to make us go spend our money to drive prices up and get inflation back up. So hopefully all that extra money in our system isn't throwing the whole global economy into a financial crisis in the process, but that sounds simple enough, right? What does it mean for our investments, though? Should I be buying gold or foreign currency or stocks or Bitcoin? Today on Dumb Money Live, our inflation investments and how we're putting our own money printer to work to try to find a way to print money faster than the Fed. This is Dumb Money Live with Chris Camillo, Dave Hansen, and Jordan McLean, streaming live on YouTube. We are Dumb Money. Hey there, Dave here. Welcome back. This is Dumb Money Live. We have Chris and Jordan, and we want to thank you for joining us this morning and remind you, first things first, as always, smash that like button and get chatting with us down there in the live chat. Have a bunch of people already on this morning.
Smashed, man, smashed.
Did you smash the button already?
I did. I already got mine smashed. We got a lot of good people right now already. We have Chris V, Pedro. What's up, man? Pesh just reminded me that GAN earnings. How the hell do I not know that GAN earnings are today? Is that true?
You are.
Are GAN earnings actually today?
I actually don't know, but we've been going like a million miles a minute, just trying to stay on top of things, and yeah, I wasn't actually sure that GAN was today. I mean,
well, I saw the GAN news. I saw the GAN. We'll talk about that in a second. But can I just say the best quote, Dave, of the morning so far? The best comment. Luis Fernando, Jordan's. I'm sorry, Jordan. I'm going to do this to the end of time. Jordan sold his Tesla 160% ago. I'm so sorry. I'm so sorry. Well, that is a great, and I think maybe a true comment. What's up, guys? It's gonna be an awesome show.
I saw a tweet. Dave, I saw a tweet last night. I'll see if I can find it. Did you see it? It was about Tesla and the stock split, and it's a new conspiracy theory, kind of. And you know how much I love a good conspiracy theory. Basically the time and day that Jordan decided to sell Tesla stock was when Elon Musk said stock price is too high, or Tesla stock is too high, or whatever.
Yeah.
That was treated. He tweeted that on 5/1, May 1st, and they're doing a 5-for-1 stock split. And he tweeted that at 8:11 a.m. and they announced the stock split on 8/11, August 11th. Is that not the most, like, cryptic, interesting? Like, I kind of think that Elon is the kind of guy who's playing this multiple 3D chess game in his mind and knew the information. Also, if you watched that episode when we talked about it, you know my theory about how he actually wanted the stock price to go down because of tax reasons and his strike price on his options that he was being granted. So.
Dave, do you know, I don't know why this popped in my head, that it's been 30 years. 30 years ago, me and you were like hanging out in the school library during lunch in like 9th grade talking about conspiracy theories and the pyramids and trying to like poke holes in them. Like, I don't know why that just popped in my head. Dave, that was 30 years ago. Me and you were sitting here talking about conspiracy theories.
That's the thing.
And here we are. How the hell do we even still know each other?
I don't believe any conspiracy theories, really. The fact that it is a conspiracy theory means it's probably just made up. But I love the idea of them and all of the kind of like layers that can build into them. I've been fascinated. You know, like after that lunchroom chat, we were into UFOs when the Discovery Channel was doing all those documentaries. When, like, remember it was like, I don't know, the anniversary of the Roswell crash of the UFO. Remember when that happened? And all of those classified documents. In the early days of the internet, you were able to start like finding all of these like scans from the Magic 12 and everything.
Dude, Martin Muldoon just had the greatest comment, and he's saying that maybe Elon was referring to the actual stock price, not the valuation, Jordan.
And it makes sense.
Maybe that's what he's saying, and that's why he's doing a stock.
He said Tesla stock too high.
Was too high. The stock
on
price was too high.
On 5/1, he was like telegraphing to us that they were going to do a 5-for-1 stock split, and that they would announce it on 8/11 because he tweeted that at 8:11 a.m. I just think that's fascinating, and I don't even know if that's a conspiracy. I just think that's just him being as he's not allowed to tweet anything without the SEC reviewing it first or something, and he didn't actually say anything other than, I mean, I don't know. I just thought that was the best tweet that I had seen.
It was, and I want to run through a couple things that have gone on since our last show. I know a couple people were complaining that we take too long to get into our primary like topic of the day, so we're going to get in there, guys. We're going to give us like 5 minutes. We're going to get right into that topic.
But we have to do that because we really appreciate all of you who show up bright and early, and the more people who show up early, the quicker we can get right into the topic. We're up to almost 300 viewers now, 294. But we know that there's this like ramp up period in the beginning of the show. So we do have to kind of delay the main topic. And so we've added this little ticker at the bottom so that you can see where we are in the show. Right now we're doing some live chat. And coming up, beating inflation. We're going to also, in addition to talking about how to beat inflation, we're going to have a Would You Rather, gold versus Bitcoin. That should be a fascinating debate. And then some more chat because we love to talk to you guys. We love to answer your questions. And then if you stay tuned to the very end, we have a trade idea that we found in our Discord channel. I think, Chris, you already invested in it. I know you both researched it. So stick with us to the end. It's our trade of the day. And I haven't decided what I'm going to do, so you guys can try to convince me.
Dave, speaking of Would You Rather, how great was that first Would You Rather we did? If you guys haven't seen it, we actually did the premiere last episode on our old Dumb Money channel.
Oh my God, I loved it.
YouTube.com/Dumb Money. And it is so, the editing, the fire, the explosions. And then, by the way, I tweeted, Dave, you know this, I tweeted Trevor from Nicola yesterday.
Yeah.
Okay,
I retweeted Trevor.
I tweeted him a little snippet of it.
Well,
and by the way, I was gonna say, if you can go on Twitter, if you guys have Twitter accounts, go on Twitter, go to my account, Chris Camillo @ChrisCamillo, and please retweet it, like it. Let's get that thing going viral. I want Trevor to see that Would You Rather, and I know I feel kind of bad. Is I crazy calling a newly minted? Uh-oh.
You just
dropped
your mic.
Billionaire.
Literally, that was a mic drop. So I retweeted your tweet, and I tagged Trevor, and I tagged their corporate Nikola Motors account. And your whole premise in this video was that they're not a car making company. They're a stock collab company, and their next collab is going to be with U-Haul. So I noticed you didn't at U-Haul. I added U-Haul as well.
Oh, that's why I shouldn't be tweeting, Dave. But go on there, please, like it, retweet it at Trevor. Let's get him to see this thing, man, because I think it's funny. I'm a little afraid he's going to lash back, though, because I called him a douchebag and all of his friends were getting on that jet. And then I realized he's worth like $15 billion, and he's a little crazy, I think, maybe. I don't know. I'm not saying he is. He just seems a little odd. So,
well, nervous, and he's just not running the company like a professional. I call him the P.T. Barnum Tesla wannabe stock. And I've seen some comments of people saying that I was saying Tesla is a fraud scam company. No, Tesla. I'm a Tesla fanboy. I've been in since I think since Jordan sold. Hey Chris, check your mic to make sure it's pointing at your face.
Fraud. They make a real product, right? They actually have revenue. So yeah, they're not Nikola, that's for sure.
Nope, not Nikola. By the way, school is back today. My kids are in school. I mean,
virtual school,
at
right?
Home, that is. Yeah. And so, like, if my Wi-Fi goes out, it's because the kids are both like streaming school all day. But
I mean,
it is back. The question is, how long does it last? Right? We've been talking about this all summer, right?
Yes, and we've already seen some of the universities start classes, and then within like 2 days say, yeah, you know what, we're going all online. And is Highland Park?
University of North Carolina.
So
we called it, right?
Exactly. Is our local school district Highland Park? I saw on the local news, which I have on in the background, and I can't stand watching local news, but the graphic they had showed that we were online only. I thought they were doing a hybrid of in-class and online.
It's online only until whatever the date is in September. And so for the first few weeks, the first like 3 or 4 weeks, everybody's online. And after that, it's whatever you chose. And then you're locked in for like 9 weeks at a time.
But the question is, how long does that last before it just shuts down? And like this first 3 weeks is a practice period, so everyone knows exactly what to do if and when it shuts down. I don't think I'm going to put it right now. I want you guys to give me a date right now. I'm going to say our local school district, they're supposed to open up in September. I think they probably will. Yeah. I think they are shut down by October 18th.
What day is the beginning of classes, in-class classes?
It's like mid-September.
And what percentage are we expecting to opt to?
75%.
Do you think 75% are going to show up in person?
Yeah. So what do you think? I'm saying October 18th. Let me make sure it's not like a weekend day. It is. October 16th, because that's a Friday. Okay, October 16th. That's my day.
And what was
over under? What do you think?
What was the what again was the start date?
It's like mid-September.
If I don't have an exact start date, I'm going to give it a week and a half. Five classroom days plus 2 to 3 more classroom days the next week, and then they're going to have to shut down, maybe not the entire district, but a substantial portion will no longer be going.
Okay, so you're saying by end of September. Jordan, you have a guess here? My school district?
I don't know. I'm hoping that it stays open.
Hoping, okay, but we need a number. Give us a date.
I'll give you a holiday. Let's go Halloween.
Yeah, and Chris, your sound is distant. It's not just what I'm hearing in my earpiece. I think when you put your mic back on the stand, you didn't put it in the right place, or not pointing it at your face or something.
It wasn't my mic. It was my whole iPad. There we go. That did move. Is that mic. Better?
Yeah. Okay, that sounds better.
Is that better?
Yes.
Okay. Okay, whatever. Guys, if you think my school, you think my school's going to last till over October 16th or under, let us know, man. I'm telling you, this is a big trade, because when the schools shut down, you're going to see a lot of stuff happening, all right? We've been talking about this. If schools shut down, the at-home trade is going to accelerate. We've already talked about the at-home trade. We're not going to do that again today.
No, but we will give you a little hint that this actually does play into our trade of the day. So stick with us until the end of today's show, and you'll know exactly what the trade is.
It does. One more thing, guys.
People in the chat actually like our banter. Some of them. I mean, it's fine.
All right. So GAN did have some news this morning. Now I'm a little regretful that I sold all that GAN. I mean, I still sold it at a level maybe slightly higher to where it is today. But I do still have 20,000 shares of GAN. And they had a deal with Penn National. They announced their social gaming platform at Penn National. But all that means is simulated gaming with Penn National. And quite honestly, it didn't mean that much to me, except that they kind of gave a hint in the press release that they hope that this is a sign of bigger things to come. So who knows? Maybe GAN will have bigger things to announce with Penn National in the future. This is not the tier 1 partner that we've been waiting on for GAN. I think a lot of people on StockTwits and on Twitter were talking about how, this is the tier 1 partner. I knew it was going to be Penn National. No, this is not the tier 1 partner. That is a real gaming partner. That's what GAN said it would be. That's not announced yet. We kind of know there's only 2 or 3 players that could be. We've talked about them on the show. And we'll find that out. I don't know if we'll find that out today. If earnings are today, we might. But probably not. I think we'll probably find that out when the deal is done. And there's some regulatory stuff that has to happen before a deal could be done. So I think GAN earnings will be exciting today. I didn't realize it was happening.
I'm starting to like this new system a little bit more. I think that we got the bugs worked out. I figured out how to get the stock chart on the screen. So it's going well. Earnings after the market, according to JJJTT. GAN is going to go off today.
All right.
Oh, did you notice, Chris, you're wearing your Cruiser's Got a Cruise shirt, and I got the new Dumb Money Live shirt that just came in the mail yesterday.
I need to get that.
My mug has not made it yet, so I'm really looking forward to that new mug. dumbmoney.tv/merch if you guys want any of this stuff.
Yeah, and Leon, I know, is still, who's one of our key moderators, is still helping us out, sending out some free merch to people. Guys, if you get some free merch from Dumb Money, if you're active in the Discord channel, if you're one of our active people, Leon's going to shoot you out some merch. Would you do us a favor? Send us a pic of that merch. Just throw the shirt on, throw the hat on, whatever. Send us a pic, and we'll throw it up here during one of our episodes.
Tag us.
That'd be really
tag
fun
us on Instagram at Dumb Money TV. Upload it to the Discord, but yeah, Instagram's probably where I'll see it first. So tag us.
Yeah, absolutely. So let's get into this, guys. I mean, I feel like, Jordan, I hope you prepare, because this is right up your wheelhouse, man. I know what you do every night. You're reading this crazy macroeconomic stuff that you love. So like, I'm really just here to I want to hear what you have to say about inflation, because this has been something that you have been thinking about for a while, and I know you're a little bit obsessed with it. So before we talk about our inflation trades,
he loves it.
He loves it. Before we talk about the inflation trades, could you just explain in simple words to us in the community kind of how you see this, how you kind of see the macro environment unfolding, most likely unfolding over the next few years? And if there's some different scenarios, like guys, if you haven't watched a show before, you know that we're all about preparing your mind and running scenarios so that when those scenarios actually play out, you already have that playbook out for your trades. So Jordan, is there one scenario, are there two, are there three scenarios for how this can play out over the next few years that we've gotten ourselves into this hole of just printing money? And I don't see how it stops, right? Can't you like not stop it once we're borrowing too much? You can't really raise interest rates, and you got to print more, right? I mean, could you walk us through that?
Yeah, so I feel like we're in kind of a weird position right now, especially if we're looking at, what do we do to hedge inflation going forward? Because you've seen kind of these epic runs in gold. Commodities are up. Really, the only commodity that's not up is oil. And we all kind of know the reason for that because people aren't driving as much. But in a typical, inflationary scenario, you'd see oil up just as much. But what happens from here, right? I mean, the money's already been printed. We've already got increase in money supply. The problem is that we don't really have the velocity in money that would lead to a higher inflation rate yet.
What does that mean? Explain what velocity means. What does that mean?
Money's not moving around as quickly as you'd hope, right? And so, a lot of people, when they got their stimulus checks, we know that a good portion of it went to paying off debt, which is great, but that's not really stimulative to the economy. Maybe it is in the future once you get debt levels down to like reasonable, at least household debt levels down to reasonable, to reasonable levels. But you really need people out there spending money, right? And the only place they can really spend money right now is online, which is, I think, why you see all these tech stocks flying through the roof, Shopify, Amazon going nuts, because they've still got earnings, right? Anything that you need, you're going to be buying on the internet. You're not driving, you're not going out to restaurants, you're not doing any of this stuff. I mean, you are a little bit, but not as much, as you kind of typically see.
Jordan, Daniel Press says crises are deflationary. It's not certain that we get inflation, but we're not thinking about the crisis. We're moving beyond. These scenarios that we're running are not for now.
Saying, right?
They're for the next 3 to 5 years, right?
So we're still in the middle of the crisis. That's why I think you've seen some inflation, you've seen asset inflation, you've seen commodity inflation. There's still businesses running. There's still infrastructure being built, all that stuff, and there's preparation for infrastructure being built. And so you see some of these inflationary aspects, but CPI is not really moving, right? You're not paying any more.
What's CPI?
It's a consumer price index, right? And so you're not really seeing any of that stuff going on. And so that's where, you say inflation or deflation. We know that there's been monetary debasement, right? And so that's kind of a fact. Because we've been, the money printer's gone BRRR. So, as people like to say, but really what's happened is that the money supply in general has increased. I love that.
This might be my favorite video on the internet right now.
You look so angry.
Great.
So basically the monetary supply has increased, but the velocity of money hasn't increased. And so what causes inflation? Is it excess money chasing things? Yeah, we have excess money. We've got check one, but we don't have the check two of chasing things yet, at least to the extent that you'd like to see. And so that's why I don't think we're in a deflationary environment, because we've got so much extra money right now. But that could lead, once people are free and clear and we start moving and shaking again, we have the excess money in the system. And as long as we don't, as long as the government doesn't go hawkish, right? So the Fed doesn't go hawkish, and we don't, reduce the level of outlay by the federal government. As long as they kind of stick with, I think, we've seen that there's plans on the right side and on the left side to do things that are stimulative for the economy, like infrastructure work. I think if those things happen, and you get people back to work, you've got this excess money sitting out there, and the Fed doesn't try to deflate the money supply then I think you could see inflation at that point.
So that's the whole push, is trying to get inflation from the 1-ish% where we are now up to 2.5%. And they've committed to not even thinking about raising interest rates until they get back to growth in the economy, instead of 1% feels like we're stagnant.
Okay, so the scenario, can you talk about the scenario, how that plays out? Because let's say the pandemic ends, right? It ends at some point in the next 6 to 9 months, hopefully. I say ends at the beginning of the end, with vaccines and treatments and people getting back to life, right? So you're saying when that happens, we would likely see the velocity increase, and that's when inflation is most likely to rear its head, right, at that point in time. So at that point in time, you're saying, and let's just simplify this, that the price of goods, the price of commodities, the price of things at that point in time are going to go up, because there's a lot more money chasing those things, right? And so the price of those things goes up. Now, what does the government, and then really things get more expensive for all of us, right? That's the result of it. The government, people don't like that. The government doesn't like that. So what's the scenario? What is the government?
Well, I don't know if the government doesn't like that, right? It depends on who you are, if you like it or not, right? I think like is kind of a weird term, and so what tends to happen is if you're in debt, you tend to like inflation. If you own debt, you tend to dislike inflation.
Yeah, and that's what I was trying to say at the big top of the show, was that if things are cheaper, and if your money is going to be automatically worth more tomorrow than it is today, it disincentivizes you from spending your money. And so you hoard cash, and that just slows everything down. So inflation sounds like a bad word, but inflation is one of those things that if it's runaway like it was in the 80s, it's hard to keep up. When you have 13% inflation, if your money isn't making 13%, your money is actually losing. But if you can get to 2.5% and your money is able to make 4%, 10% in the market, whatever, your money your investments are doing better, and it's encouraging you to actually spend some money, because you know that it's dwindling in its value over time.
So that's really the most
things
important.
Like outside of isolation, right? And so it's it's not just what's happening with inflation, right? You also want to see where you are in the business cycle too. So do we have, do we have corporate growth or do we have corporate decline, right? And so if we have corporate decline and inflation, that's where you see stagflation. And that's kind of one of the things that, is that where we're at right now? I don't think anybody's really addressing that because you do see decrease in earnings, just because of the effects of the pandemic.
Okay, but getting back to the scenario. So we're coming out of the pandemic. We have inflation, okay? Like we have inflation. Let's not talk about whether it's a good or bad thing. We have it. Is there anything, what is the reaction to that? Or is there any situation that when we come out of this pandemic and people start spending money and we have all this debasement of the currency where inflation doesn't happen? I mean, is there something that the government would realistically do? Is there a scenario that they can put into place quick enough to where inflation is not really an issue? Or do we think this is the most likely scenario here?
It depends on what they want. And so, one way to pay off debt is with inflation, because if debt becomes cheaper, you artificially boost your GDP, and then hence your income on taxes. And so at that point, it's easier to pay off your debt. Your debt becomes a smaller portion of your assets. So like people talk about debt to GDP all the time, but they don't really talk about debt to assets. United States is actually in a really good position, debt to assets. We're at like 40 or 50%.
So
right?
we almost in many ways, and I know there's kind of three ways for us to get out of our deal with our debt situation. And one of the ways that people talk about quite a bit is inflating our way out of it, right? So basically, by having that inflation, it allows us to essentially pay off our debt with even lower, right? Even lower.
Well,
there's more money in the system.
One, it does that, right? But the other thing that it does is it lets us pay off the debt without austerity, and that's kind of the goal. Nobody wants to sit through, paying off debt because then you're not getting to grow the economy also, right? You're actually hurting the economy while you pay off the debt, and that's one of the theories of why the Great Depression lasted so long, is because of austerity measures to try to pay off debt. And it turns out that works. It doesn't work well, and it causes a lot of pain for citizens. And so, a way to get around that is to actually debase your currency, pay off your debt, while at the same time you're trying to stimulate the economy into growing.
Yeah, and so obviously here in America, I don't care if it's the Republicans in control or the Democrats in control, we do not, if there's one thing we know, we do not have it within us to go through austerity in this country. That is not an option. Will we agree? That is not an option. That's not actually going to happen. So I think that this scenario is the most likely scenario. I don't think austerity is realistic in the U.S. Is there anything else? Is there a third scenario, Jordan, that's reasonable that we need to be thinking about as we go through the next couple of years that we should be looking for, or is it one or the other?
Yeah, so we've debased already, right? But we're still not seeing GDP growth, and so I think if the Fed is basically saying we're going to go through the debasement. If for whatever reason we're not able to inspire GDP growth with whatever type of government programs are put out, then at that point you could see stagflation for the next 5, 6, 7 years.
And explain stagflation one more time quickly for us. So
that's basically where you get lower than expected GDP growth, or even like a declining GDP, and you get inflation at the same time.
Okay, so that's not a great situation, right?
Yeah.
To be in. All right. I think we nailed what the scenario is, guys. We're in the pandemic right now. Inflation is still happening, although it's not happening on every level with every commodity as much as it could be. I think when we come out of this, when we come out of the pandemic, the most likely scenario that we're going to be looking for, I think what most people are talking about, it's almost assumed at this point, is that we're likely to have some pretty significant inflation. Maybe it won't happen. Macroeconomics are a really hard thing to predict. But this episode is all about, the debasement of the money supply, potential inflation, What do we do as investors to beat it? How do we print more money than the government can print, right? How do we beat that inflation? And I think you already said it, Jordan. You said the most important thing, and the thing that's on my mind, my strategy, what I plan to do, in addition to a couple more traditional things we'll talk about, is inflation is not bad when you own debt, right? Right? When you own debt, correct? Inflation is not.
No.
I'm sorry.
It's the other way. It's the
other way around. Sorry.
If you're in debt, deflation.
You're in debt. I'm sorry.
Let's say that you've got a mortgage that's like at $200,000 or whatever, and the real value of that $200,000 goes down by 50%.
Of course.
Salary goes up, then you're in a better shape.
You want to be in debt owning things.
You want to lever up.
You don't want to hold debt, so you don't want to own bonds or anything like that.
No, not own debt. You want to lever up in this situation. When I say you, by the way, anytime we say you in this episode, we mean me. We mean us, because we're not financial advisors and we do not know your risk. Okay, guys? So this is what we're going to do. We're going to tell you exactly what
the three of us. That's it.
Yeah, the three of us. So here's the deal, guys. I love being in debt. I've always loved being in debt. I love borrowing money. In fact, however you feel about Trump, I remember reading when I was an early teen, preteen, or teenager, reading his first or second book. I'm not even sure if he wrote it himself. I think another guy completely wrote the book for him. But I remember reading that book, and a lot of it was about leverage, right? And, oddly enough, that's what I took away from Trump was leverage. And growing up in the 80s, if you're a little business money nerd like I was, you see these people that are making it, and you see these corporate moguls, and it was all about leverage. And I was like, you know what? That really makes sense to me. Why not just borrow money from other people and then do big things with it? You know what? If it goes bad like it did for Trump, you go bankrupt and you start over again. I know it's ridiculous, but the bottom line is leverage is everything. There's this pyramid, right? And the pyramid is people give their money to the banks. That's at the bottom layer of the pyramid. That's the stack. And the reason why they give their money to the bank is they don't know what to do with it, right? They literally don't know what to do with it. So if they can get a 1% interest rate or even a quarter of 1% interest rate, well, that's more than zero, right? And they feel their money's protected. The bank takes that money and they lend it out to people, and the bank makes more money. So if you're invested in the bank, or if you are the bank, then you're making money on other people's money. But the money that the people that the bank is lending money to, right, to open up businesses, right? And when I say bank, it could be a brokerage house as well, lending out money to investors to buy things on margin, right? Or to start a new business or to grow a business. The people that are borrowing that money are taking risk. Why? Because they feel that they're smarter and they feel that there's a way to make more money than what they're paying the bank. So maybe they pay the bank 4% or 5% because they know they can earn 8 or 9% on that money, right? So that's the mentality I've always had. As you go up the food chain, the smartest people are able to borrow the layer underneath them, borrow money from them, and make even more money. So where do you want to be in that pyramid? Where do you want to be in that food chain? You know where I want to be? I want to be at the top, guys. I want to borrow as much money as I can. Dave, I know you agree with me. I want to borrow as much money as I can, because if someone's willing to lend it to me, I'll figure out a way to make more money with that money. So you know what that means? I want to lever up. And if you're telling me that we're going to hit inflation now, Jordan, for the next 2, 3, 4 years, you know what that tells me? I want to lever up even more. I want to borrow even more, because if I'm levered up, right, Jordan, in this situation, then I win. Do I win?
As long as you pick the right assets to buy.
Of course. Right. That's
and it comes down to, what are you going to do? You're going to borrow this money. You're going to be paying a low interest rate. And what are you going to do with that money? You know, the traditional thing is
everything.
The traditional hedge is gold. But I don't want to really get into gold because we're going to have a gold versus Bitcoin debate. Let's talk about the other ones, though. Is it commodities? I mean, Jordan talked about, the other precious metals, corn, electricity, what?
Right. We've seen copper make a run. We've seen silver actually make a run. Silver's more like a commodity than a currency. It's kind of, it's a boom bust, right? And so if you buy it at the right time, you can do really well. But if you buy it at the top, you are not going to do well. And so that's what you got to answer right now is, do you think we're at the top on some of these commodities, or do you think we've got further to go?
Have you ever traded commodities, Jordan?
Everything when you get into some of these inflationary hedges.
I hate how people they think, because listen, what you want to do when you're going through inflation or when you're debasing the currency, you want to be in assets, right? Because the relative price of those assets goes up. But when we talk about assets, everybody always goes to commodities, and I get it. But you know what? It's not just about commodities. I'd rather be an income. I know you agree with this, Jordan. I want to be an income.
That's what I wanted to ask. Have either of you ever actually invested in commodities, either directly through a fund?
Dave, you know, one of my very first investments, I rode my bicycle down to the little gold and the commodities exchange in Preston Center, and I bought a 100-ounce bar of silver, and I put it on my handlebars, and I literally rode this 100-ounce bar of silver back. And you know why I did that? I did that because I read the book about the Hunts cornering the silver market in 1979, and they lived 3 blocks from my house. It was the Hunts that lived 3 blocks. I can't believe these guys live right next to me. They cornered the silver market. I was so excited. I was like, I'm going to buy this silver. I took it home. Every day I bought the newspaper. I looked at the price of silver, and I calculated on a calculator how much money I made or lost. And after like 8 or 9 months, I think I made 62 cents on that bar of silver.
And that's what I don't like about these commodities is they don't have income like you were talking about. The thing.
So if you're looking at if you're looking at things that are going to give you income, the two that I really love that I think are just plagued with problems right now, or else they'd be going through the roof, are Reits and energy stocks. The energy stocks are interesting, right? Basically the biggest problem that most people think are the reason that they're not going up right now is that you've got the reduced oil demand, which I think is part of the story. I think the bigger part of the story is we don't know what the regulations landscape is going to look like if Biden wins. They could put all sorts of carbon taxes or require carbon scrubbers from, you don't know. I mean, if the Green New Bill passes, you can have all sorts of pressure on energy earnings. And then REITs are people paying their bills. Are people able to pay their bills?
Yeah, and you have to be very selective with the REITs. You find.
I think we've got like 24% of mortgages are in forbearance right now. I think I heard that stat the other day, and that's pretty scary.
Yeah, we're in a different time. Normally you would jump straight to real estate, whether you're buying some directly or doing it through a REIT. But yeah, it's a different time. I wouldn't want to be in any kind of retail kind of mall type REITs. My 5G play was not technology. It was actually the companies that own the towers, and those are the real estate companies. I really liked that. I think I sold that. Did you buy
AMT, American Tower? By the way, I think American Tower is like 25% of the XLRE if you're looking at an ETF.
Really?
Listen, but don't you think, guys, the government is going to help people pay their bills? I mean, listen, if the Democrats take control, they're going to help people pay their bills, right? I mean, if the Republicans keep control, they don't want to help people pay their bills necessarily, but they're going to have to because they care about the stock market. So they're going to figure out one way or another. This thing is so rigged to make sure that this market stays up, that if people can't pay their bills, the government will pay it for them. Listen, I just feel that you don't want to be in, some type of real estate that's in a generational transition. Like, when we say retail, agree, because everything's kind of moving right now from brick and mortar to digital, right? But I think people will be able to pay their mortgages, Dave. I think one way or another, even if the government has to put everyone on unemployment in perpetuity forever, I don't think they're going to allow, the mortgage market to collapse. I just don't. I don't believe it. I'm seeing what's happening in front of us. I'm seeing the way our legislators react to situations. I see them, okay, if pumping money into the economy doesn't work, don't worry. We'll buy bonds. Companies are going bankrupt. Don't worry. We'll fuel the bond market so they don't go bankrupt. Wait a second. That's not working. Okay, we'll buy stocks. We're doing that.
Whatever it takes mentality, where it's full force. They've seen previous Feds not be active or less active, and so they're just being as aggressive as possible. And I totally agree. But would you rather? Here's the thing. I don't think that I would prefer to be in real estate or REITs right now when you have a stock market. I'm sticking with my forever stock of the S&P 500, right?
Yeah, I mean look, they're good. There are good REITs that are stocks. I mean, I've got some Annaly Capital Management. Give you off a nice little dividend. They've actually been.
You're so boring, Jordan.
Double or anything like that, like Tesla, but it's slow and easy and makes money.
And that kind of describes our investing. Chris is the most like out there, aggressive. Jordan is like, I don't want to lose any money, and I'm okay with a modest return. I'm good with that as long as I'm beating inflation. Chris wants to just hammer inflation, just like if I'm not doing 5x or 10x inflation, I'm losing money. And I'm kind of like, I want to double inflation. I want to be doing at least double what inflation is doing.
I had this vision of Jordan, like when he decides to pull the trigger on one of his real estate, one of his REITs, conservative REITs, like getting all excited and like, that he actually, pulled the trigger on a REIT. But guys, listen, different things for different people. And I think that's great. I mean, I think what Jordan's saying is there's a lot of good ways to do this. There's not one way. There are a lot of ways to do this. And for me, by the way, this is so random, but I really think, and I don't want to say what it is, but Jordan, Dave, you know what this company is that I've been working on the side that you guys are going to be potentially investing and helping with as well. But there's a tech startup I truly think has potential to be a Deca unicorn for us. And like, that's what gets me excited. Deca unicorn, right? I want to invest in Deca unicorn.
You're out of focus.
So
there you go.
Jordan wants the REIT. Anyway,
no, so I've got a barbell, right? And my barbell is safety in public markets.
So
which is kind of like an oxymoron, but then we invest crazy money in these super risky startups, right? And so Chris goes full risk all across the spectrum, whereas I say I kind of bag my risk on just the startups.
So what does your barbell consist of, like percentage wise? How much would you consider high risk versus moderate to no risk?
Yeah, I've got probably 15 to 20% high risk right now, and then my biggest problem right now is I'm sitting on too much cash. I'm sitting on like 20-something% cash.
Awesome.
And Chris is sitting on negative how much cash?
It's a little too safe.
I checked my account yesterday, and I am margined 27%. So, I have. I think we're. By the way, I don't want you guys to take this the wrong way. We're super transparent here on Dumb Money. We're just going to tell you exactly what we're doing in our accounts. We're going to tell you how much money's in our accounts, what we've done, how much money we've made, how much money we've lost. If you've been with us the last year, you were there last year when, we took the biggest loss of our career and we talked about it. I pretty much all but cried on tape during that episode. It's on the original Dumb Money
channel. Which, by the way, Dumb Money, youtube.com/Dumb Money. That's a great episode. Later today, when we get to maybe the Ask Us Anything portion, I want to talk to you about what was that about? That was what's the chicken sandwich at
Popeyes, QSR,
Popeyes,
Burger King episode.
RBI. So what I want to do is I want to ask you about fast food restaurants, because I was driving around yesterday and the lines at every drive-through were just like wrapped around the block. I don't know if it was an anomaly or what, but let's talk about that later in the show. Is it time to talk about the ultimate normal hedge that everyone goes to when they think about hedging their portfolio?
Well, yes, we have to. It's part of this segment, and I've been thinking about this for days, so we better talk about it. You know what it is, man. It's the would you rather gold versus Bitcoin. How are we talking? Are we really going to do this?
We're doing it.
We're going to talk about the Bitcoin on Dumb Money.
Bitcoin, I mean, we're going to do it. Today on Dumb Money, it's a battle between two commodities or recession hedges or, I don't know, assets in limited supply, however you classify these two. we're going to decide, would you rather invest in gold, the physically mined metal that like pharaohs liked, or in the digitally mined, completely made up mathematical formula-based cryptocurrency that is Bitcoin? Think about it. You can only pick one. You have to pick one. It's time to play Would You Rather. Here's how it works. We put two investments head to head. We'll tell you what we think about each. Then we're going to decide which one we think's. We're going to tell you which one we think makes the better investment. We have to pick one. We don't have to agree. And between Chris's crazy risk and Jordan not wanting to lose money and me just being pragmatic about investing, I don't think we're going to agree. But in less than 10 minutes, you're going to know exactly which of these two assets we think deserves our dumb money. It's gold versus Bitcoin. And Jordan, I'm guessing that you're the guy who's done your homework on precious metals.
That's right. We're going to talk about gold for a second. In times of monetary debasement, investors flock to gold, right? We all know this. With record levels of stimulus created by the federal government and the Fed, Warren Buffett, who we know is always pretty down on gold and skeptical, recently, through Berkshire Hathaway, bought a gold miner. Pretty interesting. Barrick Gold.
Jordan, can I read you a quote?
After a historic run up from $1,200 to $2,000 an ounce, is this the right time to buy gold?
Is it?
Oh, Jordan, I got to read this. I got to read this quote on him before we go any further. Yeah. This is so great. All right, Warren Buffett. This is his quote. Gold gets dug out of the ground in Africa or someplace. Then we melt it down, dig another hole, bury it again, and pay people to stand around guarding it. It has no utility. Anyone watching from Mars would be scratching their head. That was Warren Buffett at some point in the past. Now, Warren Buffett 2020, long gold.
Well, right? No, he's not buying gold.
I can't believe
he's not buying gold. He's buying gold.
Actually,
yeah, he's not buying gold. He's buying the companies that mine gold, right? So he's
buying a gold miner, right? And so here's what you can say. He doesn't care about the actual utility of gold itself, which actually, I mean, it does have some interesting properties that makes it intrinsically valuable, aside from just being shiny and pretty. We don't really know which fund manager bought the gold Barrick, right? Barrick Gold. So it's kind of tough to say, but gold miners do become more profitable when the asset price goes up. And so if you're looking at a way to play commodity changes, you tend to look at the miners.
But right? What about all the gold that's about to be mined right off the surface of the moon?
By about to, you mean in 50 years? I don't know.
No, this is real. Okay, so let's just put it out there. Portnoy had the Winklevoss twins on his show this last week, and they basically surfaced the subject of Elon Musk is going to mine trillions of dollars of gold from Mars and all these planets. So that's why you need to invest in cryptocurrency, because gold basically has no, I forgot the word, no rarity, right? So we're going to talk about the things that you have to measure currencies by. One of those things is rarity. So one of the reasons why gold has been the standard for so long throughout history is because it's naturally rare. But if Elon can mine trillions of dollars of gold, and not just Elon, literally a lot of the world's governments are working on this right now.
There was an executive order signed by the U.S. to go out, to encourage U.S. companies to find a way to get to the moon and start mining it. Now, who knows if that's actually legal or if it would actually happen.
It's a space race against China now, right? So we don't want China to get the gold first because they're actively trying to do it.
It's all these it's all of these minerals. It's all of these precious metals, like metals that you need for electronics, metals that you need for batteries. But gold is part of it. And honestly, guys, I thought it was crazy when I heard the Winklevoss twins, because they're the Winklevoss twins and David Portnoy. You put them together, you just got to ignore everything comes out of their mouth, right? But I did the research. I literally read like 100 articles on this week. I'm like, it is going to probably happen in 30 or 40 years. Now, that might seem like a long time, but understand something. When we're talking about currency and we're talking about valuing rarity, if you have something that is decades away that could destroy the rarity of that commodity, of that currency, just the perception of that, just knowing that alone could become a massive issue. And do you know that they're raising money right now around the world to do this? I mean, there are plans in place right now to do this, guys. And like when we're in Mars in what, 2024? The U.S. is back in Mars. And I know that that's going to kick off so many conversations about this kind of space mining. And
so I would like to say something about this. And I realize that there is a future real risk about that. If you're looking at, you never hold on to gold long term, right? We can look at some charts later that this is not a long term investment you want to be in. Gold is almost always a short term play that you want to be in, as it does better than other assets, right? You never want to be long in it.
Yeah, and we're talking about something
but here's a point that we are in the I'll credit Lee Walsh brought this up. 320 tons of gold right now are used per year in electronics, and that's actually, you can't recycle that, right? It's like used very thinly on layers of things for its specific properties. This is the only time in history where we're actually using gold and it's going away, right? And
but how much?
Decreasing the supply of gold. 320 tons of gold a year.
But compared to how much do we mine a year, though?
Think about how much gold there is that we know about. Like that's actually already been mined. Do you know how much there is?
No, but I know how much we mine. I mean,
the volume of a couple of houses, right? So like you take the volume of like a handful of houses, like 2-3 houses, and that's about the amount of gold that's known of in the world right now. And so there's really not that much. And so if we're using that, and I don't really know if that's going past whatever we're mining right now, but we are actually decreasing our supply with electronics right now.
Okay, but would you say that the main value of gold is the use for electronics? I mean, it makes electronics a little more expensive, or is it that there's a bunch of blocks of gold sitting in warehouses and basements and vaults around the world?
Yeah, my point is that you're using it, and so it's becoming more scarce in the short term, right? I think in the long term, if you have people out mining for palladium or whatever, and they grab some gold too, and then throw it on a rocket and hurl it towards the face of
Jordan,
the earth, you got an issue, right?
Fine, scarcity. Let's talk about scarcity, because listen, scarcity is a really important piece of this conversation. And bottom line, I can't believe I'm about to talk about Bitcoin. I can't even believe it.
Well,
I thought I would go my whole life without ever talking about Bitcoin again. But
we know that gold is this thing that there is a limited quantity on this planet, and who knows where we're going to get more. But Bitcoin is mathematically a finite thing. So, Chris, is Bitcoin something we should be considering?
Yes, because Dave, here's the thing. We mine, I think it's 10 to 20x times more gold than Bitcoin is mined on an annual basis. So actually, Bitcoin is almost, I mean, it's ridiculously more scarce than gold. So like, let's talk about each of the factors when people think about currency. Scarcity is one of them. Who wins? Bitcoin, I can't believe I'm saying positive things about Bitcoin. It's blowing my mind right now. But Bitcoin wins when it comes to scarcity, okay? So like, I don't think, and by the way, that's even before we talk about Elon mining trillions of dollars of gold off the moon and Mars and all these other planets. By the way, do you know there's an asteroid that like holds like, I don't know, $30 trillion of gold on it? And that's not even like, that's just one of the 100 fine metals it has on it.
It's got mercury and all sorts of stuff on it. Yeah,
and there's plans to hop on that thing in the next however many years and tap into that. So, I mean,
I hope I'm dead by then.
Hop on the asteroid and start chipping off blocks of gold from it? That sounds amazing.
Okay, bottom line, there's no debate. Scarcity.
Yeah, but we know that Bitcoin has a very limited supply. We're mining it, and we're mining less of it, and over time, we're going to hit a point where there is no more Bitcoin to be mined. It will all have been mined, and then it actually is a resource that has no potential for creating more. We're not going to find any more on another planet.
And so that's where I feel like that's where the problems start to come in, right? So like once you're disincentivizing people from continuing on verifying the blockchain, right? And so because they can no longer earn revenue based on it, what's going to happen then? And I don't think people know. I think people that actually study Bitcoin, they've got some theories of what will happen. But I think if you're looking at Bitcoin for a long-term investment or a long-term store of wealth, I don't think we really know enough yet. It's not really useful, right? It's not really useful for online transactions. It's not really useful for a lot of things.
Let's keep this focused on one thing at a time. So like, because we have to, analyze this based on how people analyze currencies, right? Because these are both essentially stores of value, right? And so scarcity Bitcoin wins. Let's talk about one where
that's only one of the factors right? And so if you have something that's scarce but not useful, then who cares?
Okay, fine, but let's talk about one at a time. So scarcity Bitcoin wins. Usefulness, let's go to usefulness next, okay? So usefulness, okay, gold, maybe at this moment in time, Jordan, I will agree with you. Gold probably has maybe some more use right now than Bitcoin. But if you talk about the next 100 years, Jordan, and I know that we might be using more gold in electronics over the next 100 years, but don't you think as Bitcoin as kind of a go-to for all crypto, let's say other cryptos are based off Bitcoin, and they become some sort of medium of exchange, which is certainly not only possible but probably likely.
I would say it's likely. I mean, the problem is it consumes so if you look at the the amount of electricity it takes to process a payment on Bitcoin, and you compare that to Visa, it's like several orders of magnitude more electricity is required to run a Bitcoin transaction.
Today, that's the thing. You have to forget about being Bitcoin today. Right now, Bitcoin is the way we think about the future of crypto, right? And that's how it's valued. Whereas 20 years from now, it might not be Bitcoin, or it might be some variation of Bitcoin. But right now, today, if you want to invest in the future of that type of store of value, Bitcoin is the go-to, and that's how people are valuing it. So I think long term, you have to give it some credit in terms of its usefulness, its potential usefulness. And none of us are crypto guys. No. Like none of us are like crypto fans.
And none of us are.
I think Bitcoin is very interesting. I think from a technology perspective, I think from an idea perspective, I think Bitcoin is really interesting. What really worries me is all the snake oil salesmen out right now. You talk about Portnoy. Here's a quote from Portnoy that really irked me about Bitcoin. He said, "The thing I like about pump and dumps in crypto is that it's encouraged. In crypto, you can pump and dump all day long." So somebody like Portnoy out pumping Bitcoin, I do not want to listen to that. That's not where I'm going to get my advice.
I don't care about Portnoy, though, or about people pumping and dumping. This story is so much bigger than that.
Portnoy.
What?
You're the one that brought him up.
I know, but I agree. I got you. I got you. But what I'm saying is I think the story is bigger. It's so much bigger than that in terms of the perception. All right, let's put it this way. All right, forget. Jordan, let's agree on this then. Forget about actual future potential of its real value. Okay, let's talk about the perception of the perception of its future value, right? And how that changes over the next months to years. That's what matters, right? Not what me and you think, but what the world in general will think about its future perception of value. I think that in my scenario modeling, I think that is more likely to get better than worse for Bitcoin over the next few years, all right? Whether it's true or not, I think it's more likely to improve over the next few years. So I think when you talk about value, Jordan, I have to give the check mark to Bitcoin more than gold, even though right now I will agree with you, gold probably has more actual useful value, right?
But we don't really know in the future. Like right now, we have a use case. We can turn it into things that we wear, and we can mash it down and put it inside of electronics. But we very likely could invent a material or find another material that works better than gold for these rare, these use cases in electronics, and it's just it could go out of fashion at any moment, right?
Yeah, so one of the things that I think is interesting about Bitcoin, and maybe not Bitcoin, per se, but just some of these electronic currencies is that, so we're talking a lot about currency debasement right now. And so that tends to lead to fear, right? And then politicians will play on that. And so how do you then restore confidence in a monetary system? Well, you can't go back to the gold standard, right? So if you tried to fix the dollar value of gold right now, or dollar to the value of gold, with the amount of gold that the United States has, gold would be like 11 grand or something like that per ounce. And so it just doesn't work. You can't do it. But you could tie it to some rando cryptocurrency and say, okay, well, there's a fixed amount of this. Now we're going to tie our currency to this, and maybe it happens, maybe it doesn't, but just some politician running on that idea could lend a lot of credibility to some of these cryptocurrencies.
Okay, so so the way this game is played, though, we each have to pick a winner, and I've never invested in gold. I think maybe one time through like a ETF that was gold, but for me, the winner is clear. It is Bitcoin. I hold Bitcoin. It is not just a hedge on inflation. It to me is kind of like this this FOMO investment, this thing that could. It could go crazy and could be the best investment in my portfolio, or it could be worthless. And that's how I'm treating it. I'm not treating it as a hedge. I'm treating it as an investment I'd rather be in than having gold.
But Dave, you didn't even get to the safety element of it yet. And I was going to rip Bitcoin because the reality is that's a really important piece of this story is safety. And when it comes to safety, we can use another word, institutional custody, okay? Really, crypto right now, today, is, think about the Mt. Gox disaster, right? Like, there's this institutional custody issue when it comes to crypto and Bitcoin that is a major, major issue. And I think that's really what's holding it back right now. I will also say, and that's where gold wins, okay? Gold wins right now when it comes to safety or institutional custody, okay? Because a bank will hold gold for you, right? Like that, you can have someone hold custody of the gold that you're investing in.
But you can do that with Bitcoin. I think you're invested in Bitcoin, but not directly. You don't hold it directly. You hold it through some kind of a fund, some kind of a custody entity.
Yeah, but even in the past, there's been funds, not here in America, that have lost that institutional custody because of the complexity.
Well, and someone lost their little key fob and got locked out of their crypto, right?
But then I'm going to go back to Bitcoin and crypto in general and say, you know what? That's a problem that can be solved over time. Whereas with gold is gold. Gold's been around forever. Like, it can't get better with each of these issues that we're talking about. But over time, gold could technically become more value of time. Crypto can have a lot more value in time in terms of usefulness, and it could also become a lot safer in time, right? So these problems can all be fixed, and I think that's where the opportunity is, guys, is that crypto or Bitcoin, where it is today, has nothing but area for improvement over the next few decades, right? And whether or not that happens almost doesn't even matter, because I think it's people's perception that it could happen. And like everything else that is technology oriented, it generally tends to happen, right? So I think that's the perception.
So weighing all of those pros and cons for each of them, you have to pick one. You can't pick both. Which is it?
Not only am I picking one, Dave, I have not done this I can't remember the last time I was invested in this asset, but I purchased Bitcoin.
Actual Bitcoin?
I'm picking Bitcoin over gold. This is the future. You know why? We have an entire generation of people that are not going to be picking gold over crypto and Bitcoin. They're going to be picking Bitcoin and crypto, whether we like it or not. And I'm not going to fight that, guys. The movement is only going to get bigger. Maybe it explodes. Maybe it implodes. I don't know, but if I'm going to pick one to have in my portfolio, I like the upside of Bitcoin.
Absolutely.
I really do, and I think we're in the early stages of it. If I'm going to do one, that's what I'm doing, and I did it. I did it through that fund. What's the name of this fund that I did it through? Because I'm too lazy to open up an actual Coinbase.
What is it?
I do mine through Coinbase. I've had Kraken. I've had that one in China, Binance. I've had accounts with all of these places. I've finally consolidated it all down to Coinbase, and I'm in Bitcoin and Ethereum, and that's it.
GBTC.
Yeah, Grayscale.
GBTC. And so I purchased 20,000 shares of it this last week while I was doing the research for this show. And you know what? I'm going to live with that. I'm going to keep it in there. I'm going to close my eyes. It's kind of like, hey, people think they have gold as a hedge. This is what I feel that we are going to run into an inflationary event the next few years. And this is not my favorite way to trade it. But if I have to pick between gold and Bitcoin, I'm picking Bitcoin, and I did pick Bitcoin.
And Jordan,
I invested.
You've been making these arguments for gold, but are you going to put your money where your mouth is? Which is it for you?
I've got a mild monologue. So I think if you were to buy gold, the time to buy it was probably like a year ago, right? It's easy to say in hindsight, or really 5 years ago when it was trading at $1,200 an ounce. I think now that you've seen a run up, if you look historically at gold, and you look at buying it at the top tends to pretty, underperform the stock market for the next 10 to 20 years. And so I wouldn't really be looking to buy gold right now. But conversely, I could see myself buying Bitcoin. Not because I love it, not because I think it's a... No. I mean, my biggest argument against Bitcoin all along, and everybody knows this, is that I think it's a currency. It's not, it's not an investment, right? I still don't really think it's an investment.
See, I disagree. I think it's more of an investment than a currency.
I could buy some, and it'd be fine. I would never put more than like 1% or 2% of my wealth into Bitcoin. But I could see myself buying it. At this point in time with gold, I can't see myself buying it at this price.
So in our battle between gold and Bitcoin, our final results, all three of us choose Bitcoin. That's amazing. All right, now we can move on to the next segment, which is all about chatting with people.
Oh my gosh.
That was pretty intense. But I truly think that it is all Bitcoin, because Bitcoin is not just this asset that you're buying. It is a potential moonshot kind of thing. That who knows? Agreed. But Chris, you bought it at the all-time high, right? The last time you owned Bitcoin, you were buying it back. Remember that Thanksgiving when it was what everyone was talking about and everyone's grandparents were asking about it, and you knew that had to be the top, right? But everyone was buying it. I bought more then. You bought some.
Yeah, but I don't even care this time. Like, it doesn't even matter to me because it's different. There's the expectations are very different. And I love things where there's no way to really prove Bitcoin wrong right now, right? Think about it. So there's very little expectations. No one's like, hey, if this thing doesn't double in the next year, I'm selling it. It has its core following. I think it's more of a long-term mindset now. And it's just something that I think when you get the institutional custody, whenever that happens, I think if and when that happens, you're just going to get a natural flow into crypto and Bitcoin. And I think 90% of the people that do it are going to be like me.
Yeah.
They kind of don't even really believe in it. But they're going to do it because you can't not, right? You can't not when something gets that much momentum.
It's FOMO.
Even if
it's literally my FOMO investment. It's the one thing I have that I'm not fully bought in on, but I think it could be the best performer in my portfolio, or could go to zero.
Yeah, and listen, it doesn't matter if we like it or not. The bottom line is, I'm not saying I'm going to be in Bitcoin for the next 50 years. What I'm saying is I think the institutional and retail interest in having some allocation towards crypto and Bitcoin is going to increase, not decrease, over the next few years. And to me, that is an ARB play, right? Because we're social ARB traders. So when I see the interest in something increasing, that's an opportunity to ARB out that change, because we're seeing a change, okay? So that is really the reason why I'm picking Bitcoin over gold, is because the interest in Bitcoin is, I believe, going to continue to rise over the next few years, and that should inflate the price of Bitcoin and crypto in general.
And we want to know what you all think down in the chat. Philip Martin says, I like Bitcoin as a social ARB investment on inflation. However, it's technologically stupid and useless. Other crypto like Ethereum is way better because they are programmable tools. So of my entire crypto portfolio is 75% Bitcoin, 25% Ethereum, I think, unless the values have changed and gotten me out of whack with that, because it does change pretty frequently, and I'm just going to set it and forget it and not really place any additional crypto trades. But thanks, Philip. That's interesting.
Do you know how I feel about this, though, guys? Really, is I don't want to think about it ever again. That's the thing. It's not like I do not want to be thinking about. And we did a big Bitcoin, like a crypto seminar last week, thanks to Leon. That was a lot of fun, and we learned a lot. I learned a lot too, and it was great to have to sit down for a few hours and really engage with people that are living and dying that stuff. But like, this is not something that I just want to have it. It's in my portfolio, and then I could really look. I want to focus on equity, right? Social ARB equity trading. But I think it's good that we talked about this, because it is something that's in my portfolio now. And
so Leon actually commented that, as far as investing in the the Bitcoin miners, that he'd be wary of those right now. But there's one called Bitmain that is going to IPO. That might be something that we would want to look into as private investment before it even IPOs. I don't know if that's something.
Yeah, and Louis Fernando, I prefer a company that works for its value. I mean, I agree too. Like, I like performing assets. Like, that's 99.9% of what we do on this show. But listen, if there's an ARB play out there, if it's a social ARB play, I don't really care what it is. I'll social ARB anything. I'll social ARB your furniture, if there's a way to do it. So it really you
have really social ARBed furniture, or at least fans. Remember your garage sale shopping for fans, and you had a guy who would pay more than they were worth. And
Dave, can we do that next episode? Next episode, can we put that video on from when we were like 15, 16 years old,
definitely
doing garage sales, ARBing garage sale merchandise?
For sure. Now,
guys, you're gonna love it.
I do have a Tiger Woods comment. Tiger Woods is watching today. Hey, Tiger, thanks for joining us. He says GAN. Let's talk about GAN because earnings are after hours today. What are we thinking is going to happen with GAN today?
Oh, okay, so Tiger, here's the thing, and here's the reason why I sold most of my GAN, but I still kept kind of a core position. Is that expectations. It's not about how good GAN does, it's how good GAN does relative to what people are expecting GAN to do. And GAN has a lot of new investors the past 90 days. I think the stock's pretty hyped. I think people are looking for this tier one partner, but everyone knows about the tier one partner. So if the tier one partner isn't announced today on the earnings call, maybe that's not a great thing. Maybe that's
one thing I'm concerned about
for GAN. Yeah. By the way, there's a net negative in when they lose their big they get 50% of their revenue basically from one client, and we know that client's eventually likely to go away. But these are announcements that could get announced at any time, and that's why once the social momentum started for GAN this summer and a lot of new investors came in, all the information I was trading is now pretty widely known for the most part. Not 100%. That's why I still have my core position, but I don't want to be over levered in GAN right now.
Yeah.
But I do have GAN going into earnings. I think it's going to be a fun one. I'll definitely be watching it.
I was getting a little nervous on GAN because when you sold half of yours, I did not. So I still have over 30,000 shares of GAN, and seeing it come back.
That's a lot for you, Dave.
No, that's my gamble. If I'm going to gamble, it's going to be in a casino stock.
It's a good day for you then. They're up
Dave,
today.
are you going? You don't want to sell some of that prior to earnings today, Dave?
I'm seriously thinking about it. Because there are the risk factors.
26.
Yeah.
I mean, here's the thing, Dave. Like I said, I like GAN, but there's positives and there's negatives that can pop out on the earnings call today. Yeah. And then there's things that it could just be positive, but the expectations are of, I want to see this tier one partner. I want to see them be huge, right? Like, we already know the tier one partner is coming now. Everyone knows it. Everyone's talking about it, right? So it could be a sell the news event, even if they do announce it on the earnings call. So like, just the degree that I could social ARB this trade has gotten smaller and smaller over the past few months. I think I need to see the future of kind of where they're headed. Listen, if the earnings call is killer, I wouldn't be against purchasing more GAN after hours.
Here's my thought.
Or even tomorrow.
Yeah, I've considered it because there are the risk factors. If they don't say just the right things, the market could be spooked and there could be a sell-off. We've seen it sell off before. But remember the last earnings call? I think we streamed it live and reacted to it, and they are so good on an earnings call. Or did we stream it live? I know that we listened to it. Yeah, we did. And
they're pretty good.
They are good on an earnings call, and they are. They said that they announced they had this thing in the works on the last call, and now we're hoping to hear more details, hoping to hear how it could materially affect them. But I'm not actually expecting that they're going to have any information on the call about at most who it is, but they're not going to talk about what it means, right?
Yeah.
So I'm not too worried about that. And I feel like we're just at this time where more and more states are going to be legalizing online casino gambling, and it just seems like the right company in the space. Penn National, did you see, dropped like 2.5% yesterday when Mr. Portnoy posted a picture of him not feeling so hot. So I think he might have the COVID. And he posted.
Well, he's better today, Dave.
I saw his reaction video.
He did a little dance.
I would love to post any of his reactions, but I didn't have time to bleep it out, and his language on that would probably get us kicked off of YouTube.
Yeah, he's back. He loves his pen. Remember, I had my trade on pen, and I'm still in my pen, and it's doing great. The trade was to be in pen while sports are coming back, and to pop out of that thing the second I think sports is about to fall apart here for good. So right now I'm still in it. We'll see what happens the next few weeks. Dave, are you in
any others? Are you in DraftKings at all?
No, man. I told you, I'm just playing pen, dude. That's it. Pen's my play on college sports in general. Like I'm just sticking with pen, but I'll be out of pen when I think it's gonna come back here whenever sports falls apart, right? If that happens, that'll be my trigger to get out of pen, and then I'll get back into pen probably long term just for the Barstool Sports pump, right? Because there's going to be a huge Barstool Sports pump whenever that app actually comes out
for sure.
under the pen umbrella.
So just looking at a couple other comments, though, people cannot believe that we like Bitcoin. Like I said, Bitcoin for me is not something that I like. It's something that I feel like if I'm not in, I'm going to be missing out, right? It's literally a FOMO trade. But that was Twin Peaks 115.
It doesn't matter if we like something or not. It's not about liking it. I don't like it either. Like, I don't like it. In fact, I'm investing in it, and I refuse to actually invest in the real thing through Coinbase because the whole crypto world, I just don't like the way it works right now. It just bothers me.
So Dan,
it's about arbing a change. Yeah. If there's change taking place, we want to arb it. That's what this channel is all about. There is change taking place in the crypto world with how people think about it, with how people invest.
And there's other like Dogecoin. There's more utilitarian coins, Ethereum. The reason I'm in Bitcoin is, well, one, because Leon told me that that's what I should do, and two, it's the brand name. It is like the industry leader. It's the one that everyone knows, right? And it's kind of like just picking the leader. It's one of the reasons that you're also invested in Microsoft, Amazon, Facebook, Google, all of those, right?
Yeah. By the way, JJ says, Chris, how likely do you think Peloton will be bought up by a company? I want to talk to you guys about this today. I think I have a problem, and this happens to me occasionally. I think I might have a Peloton addiction, and by Peloton addiction, I do not mean riding a Peloton because I don't own one.
You're addicted to buying their stock. You can't get enough.
Jordan, I've been buying Peloton options on the side without even telling anybody.
Really?
I've been buying more every day.
Do we need to have an intervention?
I can't stop myself. And I don't know what to do. So I have now, in addition to my ridiculously crazy big 35,000 share Peloton long position that I've had pretty much since February. Actually, it was a lot bigger than that before last earnings. I bought about $100,000 in call options. I kind of split them up between options that expire. They're all the $65 calls that expire just before earnings and just after earnings. I love buying options that expire before earnings when I think there's going to be at least a reasonable chance of a run up into earnings because the premium is so much lower on those options, right?
Yeah, so because everyone's
getting
wanting
such a
them
better
for
deal
after, and a lot of times the run up happens before the announcement, and I'm hoping that's not what's happening with GAN. David is saying that I should sell half of my gain and buy Square or Teladoc. It's actually not a bad idea. I like that.
You got a big decision to make today.
I really
Dave.
do. I've got to think about it.
I love, man. Listen, I'm not pulling back on Peloton. I'm going to hold strong through earnings. It is what it is. We are having some amazing conversation going on in the discourse channel on the Peloton board. I was on it, I think, 2 nights ago. If you haven't been in Dumb Money's Discord, that's the place to go to contribute to the community, to actually help people vet social arb trades and to surface social arb trades yourself.
Are you looking at anything with the wildfires? Michael's asking, because with the California wildfires, that's a change. That there is there anything there, Chris? Have you even thought about that?
You know what? That's a great. I have not. But I am right after this episode. I'll look into the wildfires. But do you know something that we should be thinking about? Just starting to think about is hurricanes again. So I was just reading that there are 1 or 2 possible hurricanes in the very early stages. One would theoretically go up the East Coast, maybe hit Florida, the other into the Gulf, potentially impact Louisiana. They're about 6 days away from kind of forming in that area, but it's something to keep an eye on. So I'll remind everyone that we are in hurricane season, and these hurricane trades need to be made early. They need to be made before they hit any financial press. Okay. Yep. So, we'll do that episode. We will be on topic, guys. So, by the way, make sure you subscribe to our channel, that you hit the bell for notifications, because if we get information on something, it could be anything, but this is just one thing, a hurricane that we think is actually starting to form and is becoming a real threat, we just might throw up an episode in close to real time. We'll ping you, and that's the type of thing we want to get ahead of quickly.
And that's why if you subscribe and turn on the bell, you'll know all about it. What about Generac? We've liked Generac already, but that could be one that we should consider for the fires. Someone in the chat said that. Stephen.
Yeah.
Stephen Malik.
Thank you. I'm in Generac pretty darn heavy. I am now up to almost 5.5 full home generators worth of Generac gains. I bought a full-size generator for $28,000 this year, and I've now made the equivalent of 5.5 of those in the last couple of months on my Generac trade. And great, Generac is an awesome trade for the wildfires, if there really are wildfires that threaten, the grid out there. So I'll take a look at that. I haven't yet, but something that I'll be looking at, Generac. But they're already trading so high, guys. Man, Generac is just on fire.
Man, look at that 5-year stock chart, by the way. From like $30 or something like that 5 years ago.
I don't look at stock charts.
I know. I'm just saying, though, it's crazy.
Yeah, we have a bit of a what do you call it? A hockey stick at the end there.
Yeah, so be careful.
Yeah, it's my Generac. Woo!
Yeah, but
woo! All right. So Spectrum brands still in it. Still in some of it. I think I sold most of my Spectrum brands actually. I might have a tiny bit left, but for the most part, I'm either out of all of it. I felt like the ARB. There's nothing really there to ARB right now in Spectrum, so I might get back in it. But right now, I think I might be completely out or mostly out.
Giacomo wants to know what our 5 biggest positions are in our portfolios right now.
Well, they probably already know what they are. We talk about them all the time. Amazon, Peloton.
I'm out of Peloton.
Vista Outdoors,
I think we each need to go through our list. Okay. So do you have your list? I have to pull mine up, and I'm going to sort by.
Fine, I'll go.
By value.
Ready?
So go first.
Amazon, 1,200 shares. Peloton, 35,000 shares. Vista Outdoors, 55,000 shares. Apple, 2,000 shares. This is just my core account, not my retirement. Tesla, 400 shares. Shopify, 700. DocuSign, 3,000. Livongo, 4,000. Generac, 3,000. GAN, 20,000. Roku, 3,000. Home Depot, 1,500 shares. Twilio, 1,500 shares. Lululemon, 1,000 shares. SPWH, 20,000 shares. Wayfair, 1,000 shares.
Okay, he only wanted to know the top 5.
All right.
No, but keep going. Keep going. This is interesting.
Mid 6-figure range per stock. LYV, 6,000 shares. FLIR, I thought I sold that. Man, I got to sell the rest of my FLIR, 8,000 shares, but I'm looking to get out of my FLIR. That was my one really bad trade for the year. GBTC, that's my crypto. That's my Bitcoin, 20,000 shares. SWBI, 12,000 shares. Spotify, 1,000 shares. Expedia, 3,000 shares. That's kind of my bounce back portfolio. I want to say Zenefits every time I see ZEN. I know it's not Zenefits.
It's Zendesk.
Zendesk. 3,000 shares. Etsy, 2,000 shares. I still got the DOOO, 5,000 shares. Activision, 3,000 shares. Netflix, 500 shares. AMT, 1,000 shares. Logitech, 3,000 shares. Ruger, 3,000 shares. Ford, 30,000 shares. AZEK on fire. AZEK has been on fire. 5,000 shares. That is the fake wood decking company that recently IPO'd. Crocs. I told you guys I got back into a little bit of Crocs with 5,000 shares. ECL, and I just want to say eCarless, guys. Our old, I say ECL, but ECL is not eCarless, but ECL 1,000 shares.
You know what ECL even is? I don't think you even know. You have no idea.
Ecolab. It's Ecolab.
Some of these stocks I spend 20, 30, 40 hours researching, and 2 days later I can't name the ticker. I don't know. ECL, MPW. You know how I am. I'm so zoned in on the one thing I'm doing. After I leave it, I don't know. MPW, 10,000 shares. I can't talk about this one yet.
It's coming up. We're about to talk about trade of the day, but let's just run through.
Is this too much? Should I finish it?
How many more? You have way too many things. You have way too many things, and you don't even know what you have. You forgot that you even owned Fleer.
Stop. UDR. This is why it's good for me to do this. UDR.
Jazz A just asked, how much cash do you have, Chris? Chris has no cash.
He has negative 27% margin right now on his account.
Yeah.
Gordon. All right. So Penn, 3,000 shares. Car, which is Avis, 5,000 shares. Lowe's, 1,000 shares. SE, that came right from the Discord. They're like, I don't know, the Amazon of South Korea or something like that. 1,000 shares. Zoom, 500 shares. I did buy some Michaels stores. 15,000 shares of Michaels stores. That came.
You should really scroll to the bottom of your own portfolio more often. You find all these nuggets of
plug 10,000 shares. DEO 1,000 shares. Shell SHLL 5,000 shares. Disney 1,000. That's my forever Disney. RCL Cruise is gonna cruise 2,000 shares. Zoomies not working out so great so far at 5,000 shares. Teladoc 500 shares. PII, yes, one of our trades of the summer, 1,000 shares. STZ, we've been in that since early March, I think. 500 shares. Jout, JOUT, 1,000 shares. Workhorse, 5,000 shares. That's WKHS. Win, 1,000 shares. Peloton options, 100 of the 2020 65 call options for September 18th expiration. BLDP, 5,000 shares. The Gap, 5,000 shares. Sabre, 10,000 shares. FVAC, 5,000 shares. I don't know what the hell that is. I do know it. I just can't remember it right now. Then I also have I have another 100 Peloton options, but these expire September 4th, $65 calls. Then I have a little DIIBF. That's our Canadian bicycle company, right, Jordan? Cannondale and Schwinn.
Durrell Industries.
7,000 shares. SMNNY, 2,000 shares. Nikola. 1,000 shares. And then I have Play, shorting Play, 5,000 shares. Shorting Play, that's Dave & Buster's. Shorting Ruth Chris, 10,000 shares. Shorting, not Six Flags, not Disney, the water park.
Fun.
You know,
Cedar Fair.
No, the water park. Oh. The dolphins, the whales,
SeaWorld.
SeaWorld, 5,000 shares short. SYY, 5,000 shares short.
Cisco.
That the company that sells stuff to restaurants. Cisco.
So
and shorting 5,000. I'm almost done. Shorting 5,000 shares of VFC and shorting 5,000 shares of BXP, and that's actually a lot. It's 400 grand. I'm shorting them. Sorry, I had to do it. I had to do it once I started.
All right. So hopefully someone wrote all of that down. And the comment, Luis Fernando says, "Dude, you have to rearrange your portfolio. You have too many stonks. Chris needs an intern to remind him which stocks he owns." That's from Drew Steff. Buck Pucker. This is insane. Michael, Chris is the index, aka 1,000 companies with 20 he remembers. My portfolio, way more simple because I like to keep things simple. That's my whole philosophy in life. If I'm spending too much time or effort thinking about it, I'm not enjoying life, right? So here are my very small basket of stocks. Amazon, 1,000 shares. Tesla, 500 shares. Apple, 2,000 shares. GAN, 30,000 shares. Wayfair, 1,000 shares. Restoration Hardware, 1,000 shares. Netflix, Roku, Microsoft, and Match.com. Those are all in the $150,000 per stock range. And then I do have options, just the Cruiser's Gonna Cruise Royal Caribbean January 15 60 calls, which are up $30,000 right now. That's the shirt that Chris is wearing. And then I have I still have some Cheesecake Factory calls that I just bought because that was a while ago that I bought them when we thought maybe that things would be open. But I bought the January expiration, and I think there is a possibility that Cheesecake Factory will be doing better by January. And that's it. That's my entire. That's everything I have to keep track of. Jordan.
Jordan, let's hear about the Reits.
No, I mean that's not a huge holding. I'm not going to go through my entire portfolio. It's not going to happen. My biggest holdings are cash, and then after.
Weren't you just telling us that cash is costing you money right now?
No, it doesn't cost you money.
It's costing you about 1.2% right now with inflation.
With inflation, maybe, if those inflation numbers are right. It depends on what the inflation is pegged to, right? So CPI, no way. But cash is my biggest holding, and after that, Amazon, and then various internet like Google's and Facebook, Microsoft, stuff like that.
So guys, let me ask you a question. Chris, I'm borrowing $5.3 million right now on margin. How much are you borrowing, if anything? I know, Jordan, you're not if you're in cash. You borrowing anything?
I currently am not borrowing anything. I have $557,000 in cash on the sidelines. Okay. That's. So I'm ready to buy some things. I just don't know what to buy. I'm considering selling some GAN. The comments that I should buy some. I think Square is a company that I would like to just have for life. What else? What else am I supposed to buy today?
I don't know, but guys, don't copy our portfolios because, like, honestly, your risk tolerance is so different than ours.
Nobody
than mine,
can copy your portfolio, Chris. Even keeping track.
And they don't
of
know what I'm going to sell. That's the problem. Like, you don't know what I'm going to sell. It's not like I'm texting you guys the second I sell something. So, like, never a good idea. You need to have your own conviction, do your own research on what's right for you.
I was going to take notes on what I should buy and sell. The only thing I have is a black napkin and a dark pen. So. Where's my? Oh, here's my pencil. Okay. I found my pencil. Okay, here we go. What should I be doing today?
Today?
Yes.
You sell it. Maybe just de-risking a little bit on GAN and buying Peloton.
I'm not buying Peloton. I don't like Peloton. I'm over it.
God.
I know it's your favorite stock in the world, but I can't buy into that company.
Oh gosh, Dave. Can you do me a favor then? If you don't want to buy in, can you do me a favor?
Yes.
Can you at least go into our Discord channel and read the last week of Peloton Discord conversation? Because I think if you saw the light that we have, by the way, we have amazing members of this community that are actually calling Peloton reps, questioning them, and literally reporting the whole conversation down on our Discord group. Dave, I truly feel if you read the last week of Discord conversation on Peloton, you might change your tune.
Should I go to the Peloton group for that? Is that where it is?
The Peloton group, yeah, the Peloton group. Because honestly, it's fantastic intelligence, and that's partly why, not entirely, but partly why I decided to increase my Peloton leverage going into earnings this next month. Is you guys have been doing such tremendous work. You got me excited. I appreciate it. I truly do. And by the way, I will make my own calls and put them there myself. I just haven't had time this week. I will do some contributive work to the Peloton board.
See, I think it's okay for us not to agree on something because Peloton is people are asking in the chat, why not Peloton? I don't like Peloton's management. I don't like their ability to operate as a company. I feel like they have had missteps in the past. The one that immediately comes to mind is when they forgot to or intentionally chose not to pay for the music that they were using in all of their main product, which is not bikes. It is an online workout program, right? And all that jazzercise music in the background, they didn't pay for. And they had this huge lawsuit. So that was either a misstep or a mistake or an intentional wrongdoing. And any way you look at it, I don't like that as the company managing. And also when they were about to file to go public, they made a disclosure that their accounting and ability to track accounting in the past and in the future are subject, and the numbers they provide may or may not have ever been accurate. That's a big red flag.
Everybody does that now.
Big red flag.
Everybody does that.
I know everybody knows that, but why are you buying a company that everybody knows they may or may not even be telling you accurate information when they're reporting their sales and...
I mean, it's not exactly a Chinese company, but here's the deal. Dave, can I just say this? When you're in a high growth company, you know the rule. You ask for forgiveness later, right?
I know.
You ask for forgiveness later. And the other thing I think is really important to note is all the things you're saying about Peloton management. I agree. They've had some missteps. They've been burning a fire for the last few years, but so has, Tesla. You can say the same thing about Elon and Tesla. Listen, the Peloton CEO, love him or hate him, he is focused on such a big picture. He's trying to build $1 trillion company, not a $50 billion company. He actually has invested so much the last 5 years in growth and preparing that company to be a huge company with distribution, warehousing, supply chains. Like he actually has made such bold moves that I agree there are areas where he's kind of slipped up, but in the big picture of things, he's literally creating a company the size potentially of an Apple for the entire fitness and health industry, and he's going to make mistakes same way Elon has made lots of mistakes. So I think in 2020 you got to give him a little bit of a longer leash there, and I do honestly like a lot of the things that management has done, but I agree. I felt the same way that you felt, Dave, like a year ago about Peloton, and that was part of the reason why I did not invest in Peloton as a private company. Remember, we all had the ability to invest in Peloton at about a $3.5 billion valuation, and we passed on that as a group. I passed on it. And some of it was the same reason that Dave doesn't like them today. But I've gotten over it, and Dave, I would just, listen, I think it's good for us to disagree. It's good for us to have these conversations.
I'm completely willing. You convinced me that I should buy some after the last earnings, and I'm just looking at this chart. I bought it on right after that earnings date, and I had an immediate run up, and then it went down, and then when it got back to break even, I was like, yeah, this stock could do well. Actually, I think you see it's hit the little $50 mark, and then went down, and then went up, and then down. I got out basically for break even, and it kind of sucks that I missed out on some of these gains that you participated in, but I'm okay with it because everything else that I like better as a company has also been on fire.
Yeah, that's true. All right, so I'll continue to hit the drum beat for Peloton at Dumb Money here. But guys, listen, forget about Peloton for a moment. We have something important to talk about. Call it the trade of the day. Call it our social signal, right? Because we're really extracting some amazing insight from social sources, from Discord. Dave, how do you want to introduce this segment?
I think you just did. We're basically talking about something that we found. This came from our Discord group. This is a stock we were not really looking at, but once we looked into it, I mean, I still haven't even looked into it. You made an investment, Chris. You made an investment, Jordan. You guys need to convince me.
Yeah, and honestly, this is one I was so shocked. I saw this in Discord, surfaced it with you guys. The next thing you know, Jordan's coming back to me going, hey, I did my homework and I'm in, and he made a trade. And then I was like, wait a second, Jordan is in? Maybe I should spend some more time looking into this trade. I then did my homework, looked into the trade, and you know what? It's not high conviction. I'm not even sure if it's medium conviction. It might be a low conviction trade, but it's a trade, and I made it. And it's kind of an interesting trade that's going to play itself out over the next couple weeks when earnings are released. So why don't we just get right into it and talk about it?
What is it?
It's printers. The world has gone crazy for printers, okay? You cannot buy a printer right now. Why? I don't know. Shelter in place, work from home, go to school, at home.
But who needs to print things? When's the last? I haven't printed anything except the only thing I print are return labels for Amazon packages, and I bought a special little printer for that.
Is that John from accounting is still printing out all your emails, right? He's just doing it at home with a way less efficient printer. He's got the inkjet printer, and so now he's having to buy more inkjet cartridges than he's ever had to buy before, right? You don't get the benefit of the toner printer and the laser printer that you've got at the office that are super efficient. You're having to deal with these inkjets, and you're buying these cartridges every 3 months. So you buy the printer, it's a loss leader, but then you're just pouring money into these cartridges. I've got 2 girls upstairs. We can't have them stare at screens all day. they are printing things out to color or to do, word matching or whatever they're having to do for school. We're having to print those things out here. And I think that's where the opportunity lies, right? And that these companies make all their money in the margin on inkjet cartridges.
So, hey, Jordan, can I just say before we get too deep in here, let me just say, the trade is printers. We're not going to tell you what the stock is yet because we're going to look at the thesis, we're going to break down the data, and then we'll actually show you our trade on this printer thesis that we have. And listen, it's backed up by hard data. So, but printers is the thesis. And
I'm glad you told me that because I was about to put the stock chart right on the screen. So I'm sure glad you told me that we're not revealing it yet.
Yes, Dave, understand something, that there are right now millions of kids, I think about to be tens of millions of kids over the course of the next 60 to 90 days who are doing full-time school at home. And everybody thinks their kids need a printer because, like, my kids are constantly printing out worksheets to practice handwriting and all this stuff for their classes. So there's a tremendous amount of paperwork still when you're in elementary school. And a lot of houses either don't have a printer, or the printer they have is really old, or it's not efficient, or in some cases the parents are like, you know what, don't mess with my printer. Here's your printer.
But I almost feel like a printer is a maybe nice to have so that you can print out something that you can color the old-fashioned way. But isn't everything digital now? I mean, I have a printer, but
it's not a nice to have when you've got a classroom, when you're trying to run a classroom out of your house, right? And there's, let's say 75% or however many are going to go to physical schools, and they'll be using the school's printers. But there is going to be an increase in the amount of people printing out documents at their house.
I can see that. I totally get the thesis. I can't get excited about printers.
Nobody can get excited about printers, Dave. But
Chris is excited,
right? And so
have you seen how excited this guy is?
I am, and you know why I'm excited? I'm excited because I've seen the data. So let's just get right into it, guys. Let's show you the data. And when I say data, what I actually mean is the data behind the trade thesis, okay? I want to see what people are actually saying, what they're searching, and what they're doing as it relates to printers, okay?
So now you want me to go to the slideshow that you sent me?
Yeah, let's see what people are saying first, okay? What are people saying about printers? I have, I think, 8 tweets that I pulled, basically all within a few hours of each other, I think, or basically within a day that these tweets were out. So let's take a look at the tweets, and man, I can barely even see that one.
Whiskey.
Let me try.
Yeah, you might want to get your computer closer to you.
Why don't you read a couple? Dave, read 2 or 3. I'll read 2 or 3. Jordan, you read 2 or 3. Let's get through these eight tweets, because I think, honestly, I read a lot more than 8 tweets. I probably read, I don't know, 300 or 400, maybe 500 tweets. And these tweets are actually pretty representative of what people are saying right now in the world as it relates to printers. Okay, so Dave, start us off.
Whiskey Knight says, so apparently with all the kids homeschooling, all the parents now buying laser printers, I need a new one, and it took me 2 hours to find one that wasn't overpriced or sold out. Emoji crying out loud, laugh out loud crying, tilted head emoji.
Right.
I like to call that messy cry or messy laugh.
All right. Mara says, are some of you actually buying this printer? It sold out at $79.99 and now it's $178.99 used.
Dave, their printers are so hot, right? You want to know why I'm excited about printers? They are so hot that people are buying them used for double the price that they cost new. How does that not excite you?
Hey, Chris, if you need a printer, I have a laser printer down in my pantry, not being used. I'm willing to sell it to you for $4,000.
By the way, I did get a text from my wife a minute ago. It says, "You are crazy loud. No, you're crazy town loud. Please stop yelling." And then she just texted again, "OMG, crazy town loud." Okay, I'm going to try to chill out a little bit. I am too excited about printers today. I'm going to try. This is why I got to leave the shelter in place and have a studio, okay? So I can yell without getting critiqued from my family.
Yeah. Okay. Next tweet. Did I get this one? Okay, here we go. Do you want to read this or me?
Let me read a couple. LLL trying to buy a printer from Best Buy, and they are all sold out. This is why peeps use Amazon. So
time out. When you were searching for these tweets, the words that are in bold here are LOL, printer, and peeps. That's your search term?
Was that your search?
I'll explain that.
What?
I actually clipped these tweets, and then I had to reclip them. So the way I had to search for them again, so I had to search.
Remember, you had peeps. Words. Next time, do it on your phone so that it's a a more narrow presentation, so they're easier to read. Okay, so
let me see another.
Oh, you want another?
Let's try. I need a printer, but for some reason, like every printer under $150 is sold out. Now, this is interesting because in my research, I agree, and I'm going to show you this. We'll actually show you this in a couple minutes. Essentially, every single cheap printer is sold out. So what's happening is the cheap printers are literally sold out no matter who the manufacturer is. So now people are forced to buying like these $400 printers and $500 printers when all they really wanted was an $89 printer. And we're just going to talk about how important that is later. But
like the kind of printer that has like a scanner and maybe like a fax machine built in or something. That's how old this technology seems to me. It's like having a printer is like having a fax machine.
No, I disagree. No, with the fax thing, no. You get an app for the fax and you take a picture and then it sends the fax to whatever idiot sells a fax machine. The printer you still need for certain documents. Like I print, like whenever we're about to do a deal and they haven't figured out DocuSign yet, you still have to print out the deal, you sign the paper, then you take the picture and you fax it to people that have fax machines.
If they can't figure out a DocuSign, if you can't figure out a DocuSign, it's an agreement I don't want to sign.
That's a good point, but I will tell you, our kids aren't docu-signing their, their letter match or whatever.
But they could.
They're printing out, and they might have to print out several copies, and then they do their work. And
okay,
look, and
I will tell you,
you've got every household that's stuck at home is having to do this right now. To where it used to be the schools doing this on their toner.
I will tell you right now that the investments that I'm more excited about than the one you're trying to convince me I need is Apple, because this is basically a piece of paper that I can color on, and DocuSign, because I don't want to sign a piece of paper and take a picture of it and then PDF it and send it. I want a DocuSign. So those are my two picks. Keep going.
Dave, let me tell you something. They're not mutually exclusive. I want to read the next quote because it's really important to me, and then Jordan can finish the last three. And I'll tell you something that Apple and DocuSign do not have going for them with this quote. Ready? This is from, LDM. I've had my printer for 2 years, and this is the first time having to buy new ink. The ink is sold out everywhere except Walmart, and I'm not trying to go in there. So, you know what those guys don't have? A business that just keeps making you money over and over and over again because you're forced to buy their ink.
Yes, they do.
I love DocuSign. Dave, you know I love DocuSign. You know I love Apple. They're like two of my biggest holdings, but they're not mutually exclusive.
But DocuSign's ink is a subscription that you have to pay to do more documents and to save them. And Apple's ink is iCloud, and when you run out of storage, you have to. I pay at least $10 a month to have storage on my iCloud.
Fine, yes, but the whole world knows that. The whole world hasn't awoken to the fact that everyone is now desperate to get printer ink, okay? And we're social arbitrators, and I love it when we're able to see something that hasn't been already broadcasted to the entire world yet, okay? And so this is not just about printers, this is about ink, okay? It's about ink. Because in addition to people buying printers, because everyone is at home right now, as Jordan already told us, they're having to inefficiently supply their home printer with ink. And those home printers gobble up ink a lot more than your nice printer at work, which is made by, Xerox or whomever. So really good. Now, Jordan, finish us off, man. We got 3 more good quotes, and then we're going to dig in even deeper.
How is every single cheap all-in-one printer sold out in New York City at multiple stores too? People are really working from home, huh? I just want a basic ass printer, nothing fancy. Come on now.
Basic ass printer.
That's actually what I typed when we were looking for our printer. That's what I put into Amazon. I was like, basic ass printer. And then
I heard the key word there. You put it into Amazon. So yeah, that is yet another stock that I like better than the printer ink stock.
We all own Amazon.
We all own Amazon. Amazon has ink in stock, and I think that I would give more money. I'm giving my investment dollars to Amazon and Apple and DocuSign so far. I can't wait to hear what this stock is.
You'll learn the hard way, Dave. All right, come on, Jordan, finish it out.
Is that the one you just read? Okay,
yep.
Here's the next one.
Why are all the printers sold out? I want to upgrade my shit for better versatility and quality, but everything is gone. That's also what I put into Amazon whenever I'm looking for something.
Right,
I'm like,
read the response.
Upgrade my shit.
Here's a response to it, though.
Response.
All the people working from home have bought up so much stuff. It's crazy.
Okay, so guys, here's the thing. That's what people are saying. Period. Listen, Dave, you could have your opinions.
No,
Dave,
I agree, and that's what people are saying, and that's important.
Listen to the people. It's not about me. It's not about you. It's not about Jordan. This is about the people. Okay, that's why we listen to the people. Now we've heard what the people are saying. Let's look at what the people are searching for.
Searching?
Dave, can we pull up some G Trends charts, man?
You had web traffic charts next. Do you want me to pull up?
Should we start with home printer?
Let me skip down. Okay, here we go. Yeah, because you actually went to your web traffic next. But here is search traffic for home printer.
Oh, we're going to do it on this, not live? I thought we were going to pull them live.
Oh, you want me to pull them live?
Yeah, I thought you'd rather pull them live.
Oh, yeah, so we can get updated. So what are we doing? Worldwide?
Yeah. So 5-year worldwide for home printer. And by the way, this is something that any of y'all could do. All the data that we're looking at here, most of the data, not all the data, most of the data here is available to anyone. You can hop on Twitter, just figure out what tags you want to look for, figure out what keywords you want to look for, read what people are saying. I read, in some cases, I'm averaging well over 10,000 tweets a night that I'm consuming on Twitter, okay? So this is part of our homework as social arb traders. Now let's look at what people are searching for. Home printer, look at that, man.
That's pretty impressive.
You know, we talk about this all the time. Jordan, Dave, what's the one thing that we love on a G Trends chart? Not just a spike.
A sustained spike.
Sustained momentum after the spike.
Yeah.
So that did exactly what you want. It hit the top, and then it keeps bouncing up to the ceiling. That's awesome.
Yeah, that's all the money right there. That's what we look for. So those are people shopping for a home printer, which is an awesome tag. How about best printer? That would be a good one because they're looking for the best printer for their kids because everyone wants to invest in their kids. They want them to have the best, right? Like a good printer, surely they'll get smarter if they have the best printer.
People are looking for best printer now more than ever before.
More than ever. You know why? You know why? Because people don't really care that much about themselves, but when it comes to their kids, this is back to school season. Right now, they're looking for the best printer, and they want name brand stuff, and they're actually willing to spend up for the good, high-quality printers.
Is that a decent search, best printer? That seems like a really odd thing to put in.
No, it's not. Jordan, the word best is a super... Yeah, it's one of my favorite
People
tags.
do search for the word best. It's kind of crazy.
Yeah.
Here's inkjet printer.
Yes. How about laser?
Inkjet, look at that.
Inkjet printer, huge.
We
How
love
about
those
laser
inkjets.
Dave? Can we look at laser printer too? Nice. It's up. Not as much because it's kind of more businessy, right? It's more businessy.
Yeah.
But you know what I really want to know about?
People think that the laser printer is out of touch for them. They need, or out of reach for them. They want the inkjet because the inkjet does.
It does color. And if you're printing stuff for your kids, don't you need color? Isn't that probably why?
Absolutely. Absolutely.
All right.
Dave, let's do printer ink because that's a really important one.
Bring this keyboard over here so I can reach it. This is so backwards. Printer ink. 5 years worldwide, and boom! Look at that. It hit it at the. It hit its peak right here, March 29th. It's continued to stay up high.
Man, we're sitting up like 50%. I mean, that's a.
And
that's
now look at it spiking again, though. Look at it spiking again, guys.
It is at its all-time high again, August 16th through 22nd. And like before the previous, that was 70. So it's like going from 75% to 100%.
Yeah.
Yeah. And then how about, okay, so now we've looked at what people are searching, but let's look at brand specific. Let's look at BRRR Printer. That's one of the big printer companies, right? Let's check out BRRR Printer. And then after that, let's check out Canon Printer and then HP Printer. Let's see which of the three. Are they shopping for all of them? Or is there one that's doing better? I don't know.
HP?
Yeah, so there's Canon. Canon's doing really well. BRRR is doing okay, but not nearly as well as Canon.
Oh, look at that.
Man, look at HP Printer, man. Wow, that is a nice move right there. That's
interesting.
Dave, can you look at just HP Printer, X out BRRR and Canon now? You can get like more of a clean look at this thing. Yeah, that's a really nice move for HP Printer right there, and that's people specifically looking for an HP printer, which is kind of odd. I didn't even think people would do
worldwide.
that.
So is it doing the same in the States?
It is. Yeah, I don't know. Let's take a look. I didn't look at the States.
Yeah, look at that.
Wow.
I like US because I understand the US better. But yeah, they had their peak early in the pandemic, and they've had this new resurgence at back to school time.
Okay, so basically we've now seen what people are saying. We've seen what they're searching. Now let's take a look and see what people are actually doing. All right, can we show the data of what people, there's a couple different ways to know what people are doing. One is to look at web stats data to see where they're actually going, right, to buy this stuff. So Dave, I think we might have a slide. HP? Yeah, let's pull the slide for HP. In fact, that's a slide for HP.com. So what's interesting here is this is just HP.com, which is all kinds of stuff that they do at HP.com.
What are the two shades there? What is that showing us?
Okay, great question. One shade is for desktop, one's for mobile.
Okay.
And that's like a 14 or 15 month chart. So you can actually see year over year data on that chart. So if you look at the end of that chart, like the last 10 or 15% of that chart is equivalent to like the first 10 or 15% from last year. So you see how much higher we are from last year on both the mobile and the web traffic. Yeah. But one thing I think will be even more interesting, Dave, I think I have like an hpshop.com or something like that slide on there where it's kind of more specific to store.hp. Yeah, that is even more impressive. Look at how much that is up year over year. Those are people actually going and purchasing from store.hp.com. That's an impressive lift right there. I think if you want to just throw the other two in, we can look at BRRR and look at Canon.
It's up.
They're up. Yeah, BRRR's up. Canon's up. Here's the thing, though, guys. BRRR and Canon, these are foreign companies. It's a little bit harder to invest in them. I think the big play here, and I don't want to say the big play yet, although you could probably guess what it is.
I don't think there's a lot of suspense anymore.
but okay, before we do it, all right, let's just show the Amazon, the Best Buy listing. I have an Amazon listing of printers that are sorted by cheap.
Like literally when I went to Amazon looking for printer ink, is it this one? There's an ad for Xerox at the top, but all the printer ink is basically, here's HP, Canon, HP, all the bestseller is HP, Amazon Choice is Canon.
What I've seen, Dave, is a lot of, and I don't know where it is right this second, but a lot of the knockoff printer stuff ink was sold out. Like, you know how they sell the same ink for half the price? And that's the stuff that people go for first. And so it's awesome that people are having to now spend up for the expensive printer.
Now you got to buy it. Now you got to buy
the real deal. But Dave, can you look at, I have two slides there. One is for Amazon. It's pulled up with and one's for Best Buy for actually searching for printers, so we can see the degree to which these things are sold out. It's quite amazing.
Okay,
when you go to bestbuy.com or you go to Amazon and you sort like home printers, less expensive to most expensive, what you'll notice here, and those are all sold out, that's Amazon, so none of them have buy links on them, and if you were to click in, you would notice that they're completely sold out, right? So all those are on like wait list, like weeks down the road before they'll be re-inventoried. Best Buy, it's a little bit clearer, Dave. The Best Buy slide, you can see they just have them all sold out. They're all sold out. So when you go and look at these links, the first like 5 pages are sold out. It's not till you get to the more expensive printers that you could actually find ones in stock. So here's the thing. Hewlett-Packard, they have 2 segments, okay? This is HPQ is the ticker. And before I even say this, I'm going to remind you I am not a financial advisor. Your risk is different than my risk. This is what I'm doing, not what you should do, okay? Do your own homework.
Yeah, look at these.
Speak to financial advisors.
They're all
do what you
like
want.
This is the live page of just searching for HP printer, and look, all those are sold out. Here's a $500 office-y looking one. Like the expensive ones are still for sale, but all of the smaller ones that you'd actually want for your house. Here's a $200 Lexmark, but it's a sponsored ad. But there's not a buy link.
Dave, this is why I'm so excited about printers. It's like a once in a lifetime printer invent. Like if you're working at HP, you're like, what just happened?
This is the only thing that's happened to HP in the last decade.
So look at this. This Office Jet 3-in-1 printer in stock September 24th. That's a month from now. That's crazy.
Dave, Dave, let me ask you a question before I even get to talking about the company. Are you starting to get a little excited here? I know you are. You have to be getting a little excited.
I mean, I see your thesis. So, I'm still more excited about the digital printers of the world.
Hey, just forget about that. They're not mutually exclusive. All right, here's the thing. Guys, I want you to understand this. HP has 2 divisions, okay? So HP, and this is HPQ is the ticker. They have personal systems, which are laptops and computers, okay? And then they have printing. Those are 2 divisions. Now there's another Hewlett-Packard, right, different company that sells more institutional enterprise type stuff.
Yeah, and
okay? But the
when you had me look this up, I could not figure out which is which. So
HPQ is what you want to look up, Dave. HPQ. Here's the thing. This company is in secular decline, HPQ. Why? Come on. They make laptops and computers, and as we talked about a million times in this show, with the exception of Apple, margins in that business are ridiculously small. It's a terrible business to be in. What else are they in? Printers. Printers, with the exception of right at this moment in time, is such a terrible business to be in. It's in secular decline, okay? This is not a company that I want to own beyond the trade, but it is a company that I am so excited about with this very specific social arb trade. We are arbing right consumer behavior. We are arbing what's actually happening in the world right now, and this is what gets me so excited. I want to read you a quote from an analyst on HP right now. We always say that it doesn't really matter if you identify something out in the world that's changing if all of Wall Street already knows about it. If everyone already agrees about it, then there's no trade to be had. That's not a social arb trade. But here's what an analyst just wrote about HP, okay? Now, this guy's name is Sanker, and in a research note that AP's restructuring moves, right? He's talking about the restructuring. He's talking about the global slowdown casts some uncertainties on the company's plans for capital returns, okay? While it continues to work out a revised price strategy on printers and supplies. Now, this is where it gets good. Sanker notes that HP's PC business has been a beneficiary of the work from home and distance learning trends in response to the pandemic. Okay, so everybody already knows that.
And is that what the Q is in HPQ? The compact? Wasn't that how they became?
I don't. Yeah, probably. But listen, guys, HP is getting killed with their corporate printers right now, okay, and their corporate ink. And what they said on the last earnings call is they're doing better with the work from home stuff, but they had a major supply side issue last quarter, and they were not able to make enough printers. Now, they said that issue was getting fixed this quarter, so I don't think supply is going to be an issue this quarter. But what he says, okay, is that he goes, but he thinks those factors will likely fade in the second half of calendar 2020, and he worries that a, quote, shift to work from home may lead to a reduction in customer spending on printing and supplies. So what they're saying is that he thinks that the shelter in place there was going to be a negative going to the end of the year. He thought that all this rush for printers was front loaded in the beginning of the year. What our data just showed us is that's not true. We saw a plateau, and now we're seeing a reacceleration in interest in both printers and printer ink, okay? So I have a Wall Street analyst that is basically saying the exact opposite of what I'm seeing to be true.
That's
what I...
And that's what you're always looking for, is to have that little information edge where you're finding something that that's the opposite of what the rest of Wall Street is thinking.
But Dave, what's the risk factor? The risk factor is we know that they're still going to be having issues on the corporate side, right? They're larger printers and corporate. Now you have to balance. Do we think that the people buying printers at home are going to outweigh, right, the stuff that's happening in the corporate workplace using less printer ink and so on?
Well, that's the deal. They don't break that stuff down when they report, so we don't really know what their percentage of home sales, home printer sales versus corporate sales are. So that's a little bit of a shot in the dark, so we don't really know.
But I don't even think it matters, and here's why. I think the market already knows that they're in the dumps with the corporate stuff, and no one is expecting anything otherwise. And I think per this analyst comment, I think most of the market is thinking, you know what, they had a pop on home printers. How big is it really going to be now? People probably got their printers. Well, no, our data shows differently. So I think that we have social edge, okay? And when you have social edge, that's when I go into a trade. So I bought just like Jordan did. And by the way, I give a lot of credit to Jordan because he's the one that really got me excited about this, because when Jordan puts on a trade, then I really got to start looking into the trade. So it's not high conviction, it's low to medium conviction for me. But I did buy, and Jordan, I want you to talk about your trade. I assume you just bought shares. I bought 10,000 shares of HPQ. And you know what? Right this second, I'm doubling down because I'm so excited talking about it right now that I'm going to buy another 10,000 shares right this second. Hold on. Let me put the order in. Okay, so if the trade goes through, partial, it's going through. In a minute, I'm going to have 20,000 shares of HPQ. I'm going to trade this. I'm going to hold it through earnings. I forget when earnings is, guys. I think it's in the next couple of weeks. I think it's like late August, early September. I'm going to hold this trade through earnings. I'm hoping they'll have a great earnings. I'm hoping that their guidance will be even stronger based on all the wonderful data that we're looking at here today. Jordan, are you in the stock or options or
just stock? I was looking at buying 10,000 shares, but I was like, I'm not super jazzed about it, so I bought 5,000 shares just because it's HP. So I'm watching it. I could probably double down or triple down if I see things changing. But really, I mean, I'm not the one. It's the unsung heroes here, our Discord channel, right? And the people that are in the HPQ message board, literally unsung heroes.
Now I do have to.
Guys, handle is unsung.
So I don't know if this is an indication on how their sales are doing, but their website is, when I go to shop and then I click on ink and toner, I get an oops, we can't find the page. So I don't know if that's a good thing or a bad thing, but that's definitely what's happening here.
Do you think people go to HP.com to buy anything? They go to Amazon to get their ink, and then HP ships out their
and
ink
it was
to
at the top of the search results on Amazon. So that's how I would buy printer ink.
But yeah, because then you know it's going to arrive. You buy it from HP.com, it can show up like 2 weeks later. That's the biggest advantage of buying on Amazon.
Well, and that's why, let me just tell you, that's why instead of HP, I'm staying away from HP, and I'm investing in Amazon and DocuSign, and what was the other one that I liked here?
I don't know, Dave, but you are a tough sell today, man.
Apple.
You are just a tough sell today.
Look, I've got my paper, I've got my subscription services, I've got my way to buy everything, including ink. So yeah, I'm happy with my other 3 stocks.
How about this? How about I'm in DocuSign, I'm in Apple, I'm in all the stuff that Dave talks about, and I'm also now in HPQ, because it's not about me, it's about what people think. I try to remove my own biases from social arb strategy. Okay, I think it's really important. Now, listen, maybe Dave's right on this one. Listen, I hope he is, because I'm also in all the stocks that Dave's talking about. But I am in HPQ through earnings based on the data that we're seeing. I owe it all to our Discord channel. What is that? How did you get to the Discord channel, Dave?
Go to dumbmoney.tv/Discord, and that's how you can get invited to that. But I'm just pulling up a chart here for fun. HP is in green, and DocuSign is in orange.
And by the way, guys, if I make a bunch of money off this trade, I am going to Venmo some cash over to Leon to buy a bunch of merch for the people that were in our Discord channel talking about this trade early on, because I deserved it. I could at least send them a little bit of merch, right? Free merch if I make money
for sure, you should.
Because of them surfacing a trade. And I want to say a sincere thank you in advance because I think the trade's going to go well. We'll see. I might. Who knows? You never know.
I hope it goes well for you.
That's trade the day, right? That's our social. What are we calling this, Dave? Social
signals? Maybe?
That is our social signal trade.
Hang on, let me put you big screen so that the editing makes it a little easier.
That is our social signal trade on printers. I never thought I would be talking about printers, but here I am.
I can't believe you are talking about printers. I'm out.
I never thought I would buy HPQ, but it happened.
Yeah, Jordan, you're in on this. This is going to be exciting. Me and Jordan. Not Dave. Well, can't win them all.
Not Dave.
All right, so what next, Dave? Can we move the little bar over? Well, that's it. That's the last bar on the day. Does that mean our show's over?
No, we're still here. No, that actually kind of does mean our show's over. Thank you guys so much for watching. Now, do we have other stuff we want to talk about? I mean, I'm sure that we have people who want to chat with us.
Dude, it's been like, Dave, I mean, I guess for a minute, but it's been like 2.5 hours almost. This is insane.
It's been a good show, though. We thank you guys so much for watching. We do remind you that we do this every Monday and Thursday and sometimes in between. So make sure you subscribe to make sure you know when we're on. The little bell notification will help you out there. What else do we want you to do? Oh, if you're too busy to listen, like if you can always put us in the background and just let it play. But if podcasting is your thing and you like listening to those, we put all of these on the podcast. So Apple Podcasts, Spotify, Google, all of those platforms. Subscribe to us here. Follow us on Discord. Leave comments in the video down below. And that's it. Anything else you guys want to say?
Watch next week. We have another big, I think we might do another election episode where we start actually digging in to very specific election trades next week. We had our big election episode this week. And by the way, it's doing better than almost any episode we've had. So obviously you guys like that coverage. We're going to dig in deep. We're going to go into individual trades. And if we have a Biden win or a Trump win starting next week, you don't want to miss that. So make sure you hit the bell. We'll see you next week.
We'll see you on Monday. Have a good weekend.